And I want to talk about the IMF's report. Let me start from there. Clearly, they are warning about fiscal imbalances around Senegal's economy right now. Clearly, that economy was under some pressure last year because of the drought. The broad expectation is that it should rebound a little bit. But what's your reading on that statement from the IMF?
Well, I think you have two sets of issues. Clearly, the drought had an impact on economic growth last year. Growth collapsed to about 2%, maybe 2.2% at most, and that's because the primary sector, so agriculture, contracted sharply. So obviously, just because of the base effects, I think that the situation will improve this year and that the growth rate will probably increase to 3.7% or so. Actually, if you look at the non-agric sector, it was actually fine. It expanded 4.7% or so. So the situation is not that bad, actually, from a long-term perspective. But on the fiscal front, Senegal has had sizable deficits in recent years. And for 2012, the initial IMF target was 5.6%. It's now been revised to 6.4%, and the IMF even says that there is a risk that the deficit could reach 8% of GDP. That's primarily because of the energy subsidies. I mean, there is a big issue in terms of electricity supply in the country. As a result, they've had to import fuel and petroleum products, and that's taking a fiscal cost now, the fiscal toll on the economy.
All right, so let's talk about those reforms. Clearly, you've talked about the energy subsidies. That's one big issue that the IMF has highlighted. But talk to us about the other reforms you think that Senegal really needs to get going, more so because they have a new leader in place now.
But I think the key issue is clearly the restructuring of the Senelec, the state-owned electricity company. As in most African countries, when the government is involved in the power sector, unfortunately, it virtually guarantees a failure. There were attempts to privatize the company in the 2000s, which were not successful. And I think that the new government is probably going to work on that, because clearly not having consistent power takes a toll on the economy. In fact, if you look at the index of industrial production, it was up 5.7% in 2011. But the index of energy production was only up 0.8%. So clearly, it shows you that there is a problem in that field. But then I think the big issue is that Senegal has a narrow export base. It doesn't really have a star commodity like oil in Nigeria or cocoa in Ivory Coast. So they have to find another comparative advantage. And what the previous government was doing is to boost the infrastructure base in order to attract foreign direct investment, to make Senegal a regional hub. It's probably the right policy, although obviously you want to have the right infrastructure that also ensures that you have a sustainable growth model.
All right, let's talk a bit about the impact of Europe. Clearly, Europe is something that everyone talks about these days. But Senegal imports, you mentioned agric is a major export for the country, and they clearly exports to several European countries. To what extent would you say the whole debacle in Europe is having an impact on this economy?
Clearly, all the countries having a currency pegged to the Eurozone will probably struggle a little bit because of the decline in aggregate demand in European countries. We're starting to see that in countries like Morocco, Tunisia, which are much closer to the Eurozone. So Senegal is slightly more diversified than the North African countries in terms of export base. But having said that, I think that there will be some negative impact. But because they have the same currency, actually the exchange rate fluctuations won't impact that much on trade at the end of the day.
All right, let's talk a bit about their bond. We've seen some pressure on it, clearly maybe because of the news around their fiscal situation. But do you see a rebound? Do you see a strong rebound, especially with the expectation that the economy should recover this year?
Well, the Eurobond rallied sizably after the February and March presidential elections, so between the two rounds and after former President Wade decided to leave office. It's also been supported by a substantial risk-on environment. Now, you know that since last week, there was a shift to risk aversion, and all emerging market and frontier Eurobonds are actually down.
Right. And
Senegal lost 4.5 points, so the yield is now back to 7.5%. The price is between 108.5 to 109.5 from about 113.5 last week. it is a bit difficult to see how the bond would rebound unless risk improves, and that in itself is problematic because of what's happening in Greece and other European countries. But having said that, I mean, if you look at the structure of that Eurobond, what's interesting is that you have some accounts, which obviously I'm not going to name here, which are not likely to sell the Eurobond because of the risk profile. And also the Eurobond had not rallied as aggressively as other African Eurobonds, let's say the Nigeria 21s, Gabon, etc. So actually it still looks somewhat cheap versus the rest of African Eurobonds, which may suggest that there's not going to be a massive sell-off going forward.
So you think if we're looking at sovereign bonds, we should be looking at Senegal?
I mean, in the current environment, I think we should be cautious about everything in the sense that investors are quite worried about the market outlook, and so, you know, there's some sort of flight to safety. But if the situation were to improve, I think, yes, Senegal would probably be one candidate in terms of Eurobond portfolio for this year. Okay,
I hear you. Okay, but just before I wrap up, I know droughts sometimes, it takes a while to get out of them, but from what you're hearing on the ground, do you really think we've seen the last of this, the impact of this drought? Do you think the agri sector is really going to rebound this year?
Well, it will rebound because of the low base effects. But having said that, Senegal has faced the same issues you know, every 2, 3, 4 years. So it's not the first time that there is a sharp drop in growth because of climatic conditions. And also what it means is that actually the productivity of labor in the agri sector is still quite low, because to some extent you could smooth those kind of cyclical distortions. So I think we'll probably be fine in 2012, but you know, there might be another downturn in a few years. That's something that cannot be discounted.